Hi there, I'm John McLaughlin. Welcome to another Crossfire Gold trading strategy. We're going to be trading gold on the 5-minute time frame with the strategy that we call Crossfire. If you've seen the previous videos that I've put together, then this is day 10 and we've been back testing this strategy now for about 70 days all in all. This strategy has been working really well. You can follow along with these sessions. If you get some benefit from this, then please consider subscribing to the channel, and thank you to all the people who have subscribed since I started doing these sessions. It really means a lot to me to know that you're out there, you're taking the information and you're learning from these sessions. Talking about the sessions, what I'm also going to be doing, because I trade with things like imbalance, I trade with moving averages, stochastics, parabolic stop and reverse points. What I'm going to do is I'm going to put a number of videos together specifically designed to talk about those things in more detail. So I talk about imbalance, but if you don't really know what imbalance is, then sometimes it can throw you off kilter a little bit. So if that's the sort of thing that you would like to see, just drop me a comment, just say, yeah, I'd love to see imbalance, or I'd like to know more about moving averages. I'd like to learn more about consolidation, how it works, in reality. So drop me a comment below. Let me know what you'd like to see. Let me know what you'd like to learn, and I'll get it produced. And right now we're on the 29th of June. I'm going to be working on the request next week, putting the content together, and then I'll be releasing it after when it's finished. So kind of in a week's time from today. So that'll be good. So yeah. If you can subscribe to the channel, that'll be fantastic, and just let me know what you like. Okay, so let's get started. 5-minute strategy, trading the Crossfire Gold. Let's go. All right, good afternoon. John McLaughlin here. Another Crossfire strategy session on gold. Crossfire Gold. So it's 13:10. So I'm just going to have to get straight on with it at the moment. Okay, so we put a box on. We'll put our box on between 1300 and 1500, and the next thing we need to do is put the trend lines on. So what you're looking at here, just to explain, you've got the 15-minute time frame on gold and also the 5-minute time frame. What we're going to do is put the indicators, our trend lines on the 15-minute. Then we're going to take our trading decisions from the 5-minute time zone. Okay, I'm on trading view, and everything that I put on here gets put onto this 5-minute as well. So I'll just show you trend line. We're just going to put a trend line on here for now. Okay, and as you can see, it comes on the 5-minute as well. And then we're going to put that's the dog, by the way, he's just had a bath. He smells nice, but he's making a bit of a racket. Right, so green at the top, and we're going to change this one to red. If this is the first time you've watched one of the strategies, then I'm going to be putting a course together and ready to go through some of the subtleties, some of the nuances, some of the reasons why I look at price action, how I define what's going to happen with price action. So that's going to be good. If you want to see a bit more about this, and you want to know more about things like imbalance, things like the trend lines, moving averages and what they do, let me know in the comments. Let me know if you want to see that, and I'll get that produced. The other thing is, if you're not part of my community on Forex Fit on Facebook, then somewhere on this page will be access to go and join the group. Go and join the group if you want to really up your game in terms of trading gold. They say 90% of all success in trading is psychology. If you've lost trades by chasing trades, over-leveraging, or second-guessing your strategy, then you are acting from your emotional brain. The part of your brain called the monkey brain. It makes you act without thinking and then calls you names for losing. Access my brand new resource, Teaching the Monkey to Trade. This training is designed to improve consistency and results, teaching you proven NLP techniques. You'll also get access to an exclusive interview with trader and master NLP practitioner about learning 90% of what it takes to succeed. Get free access to the resource and interview by clicking the direct link in the description below. Okay, so what we've done, we've put the two trend lines on. And the next thing I'm going to do is going to wait for this 1300 candle to finish on the 15 minute time frame, and then we're going to put the trend lines on. So we've got 2 minutes left. So in 2 minutes I'm going to show you where we put these trend lines and how we trade from that. A couple of things to note is, let's have a look at price actions the next 2 minutes. So we've got some interesting price action. This is the 27th of June. Okay, this is a steep move to the downside. A little bit more interesting price action, but nothing quite as dramatic as the day previously. This is today, and what you can see here, these zones here, levels of previous imbalance. So this imbalance was on the 27th. The 27th was, what was that, 2 days ago? Yeah, it's Wednesday today. Yeah, I've been out of the game for a couple of days, and it knocks you. Been at a festival, so crikey. So this was Monday, okay, and I think that imbalance was previous. Yeah, so all that imbalance has been taken out here. Okay, so we'll get rid of that. Okay, again, if you don't know what imbalance is, let me know, and I'll put a video together to show you what imbalance is and what it means when you're looking at the markets, doing your analysis, and also what it means with price action and what potentially price action can do. So let me just show you this. What time is it? It's 13:14. Let me show you this candle here. So the markets need to be in balance. And when the market moves severely to an upside, we don't have a seller. We have buyers, we don't have any sellers. Okay, so this is an indication of market manipulation by the financial institutions, and what it's done is created imbalance. All right, so let me show you this. So get the box tool. The imbalance is, see that wick there? That I'm putting the other side. This little wick there. Okay, and it goes all the way down to the wick just on top here. All right, so let me zoom right in. So come from this wick here, and this wick just here, and if I can zoom right in, it'll give me a slightly better. Yeah, that's okay. Just there. Okay, so that is imbalance in the market. Sorry about that, glass is still broken. So what we'll do is we'll just highlight that box, we'll go on the cogwheel, we'll extend it right, we'll click OK, and that gives us an idea, okay, of imbalance zone. So price needs to come back down to readjust that, okay, but we don't know when. Okay, it's 13:15. We're going to put the trend lines on. We've got the magnet tool, and what we're looking for is the higher high next to this candle here. So the higher high, where is it? Well, it doesn't exist on this time frame. All right, so the higher high is this candle here. So all we're going to do, we're going to go down, and we're going to go and put that horizontally, and that sort of looks kind of, in fact, we'll put that on there. Okay, so this one, looking for the lower low of this candle. So this red candle here is the lower low. So we'll put the magnet tool on. We'll put that to there. That's perfect. And then what we do, we go and put that trend line at the bottom of that green candle. The bottom of the green candle's wick, rather. So that's there. Okay, this one here needs to be horizontal, but there we go. Now it's plain. So that is the box, 1300, 1500. We've got the trend lines on. What we need to do for price action, for us to look at a possible trade, we need to do a few things. But in essence, with this strategy, we want price to go above the red line let me say that again. We want the price to go below the red line for a sell and we want the price to go above the green line for a buy. Okay, so in this configuration there's all sorts of little nuances that we look at. Okay, so right now these dots are called PSARs, parabolic stop and reverse points, and we need it to be below the candle for a buy. So where this PSAR is right now, we're positioned for a buy. Okay, and actually what I'm going to do, I'm going to move over to the 5 minute. As I said, what we do is we take our trade ideas from the 5 minute time zone, because it tends to be more accurate for us on this particular strategy. So here's the PSAR. Okay, we need the PSAR to be below for it to be a buy, and if this price then comes down even further, we don't get in when it goes below the trend line. We wait for the PSAR to flip and that'll go above it. And what we've got is we've got probability stacks. So there are certain things that allows us to, okay, the price is going in the right direction because we've got this, because we've got this, because we've got this, and things start to stack up. So the first stack that we've got are these trend lines. Okay, is the price going above or below these trend lines? We've got the PSARs. Is the PSAR above or below the candle? If it's below the candle, then think about the candle pushing up, okay, like a little match, okay, like a little rocket. All right, so the PSAR is underneath pushing up, and by the same token, if the PSAR is on top, then it pushes it down. Okay, that's the sort of signals we're going for. The other thing I like to use is the stochastic. Now the stochastic itself is not a predictor. It doesn't predict anything. It's a lagging indicator. It tells you of what's happened, but a stochastic kind of goes up and down. Okay, and when it goes down, see, as you can see here, the price has gone down, but it hasn't really gone down into this extreme zone. And you can see here on the 4 hour time frame, it's right in the extreme. When price lines up, when every different price zone goes into the extreme of the bottom, then it's more of a chance that that price is then going to reverse and go up. Okay, at the moment on this particular time frame, it's kind of in the middle. It's kind of nowhere. Okay, so nothing is really happening that's making us think let's get into a trade. All right, the other thing are the moving averages. Now we've got different moving averages here. We've got the 5, the 13, the 50, the 200 and the 800. And what I've got in terms of the indicator that we use, the ninjacator, okay, we've got the 13 moving average. As you can see, it's green and then it turns to red, and that just tells us that we're in a green, we're lining up for a buy position, and then when it turns red, we're now in a sell position. Okay, so kind of a bit of a visual indicator. The other thing we've also got this ninja down. Okay, so this has been programmed to tell us when potentially you can get into a trade, and it's just another highlighter. Okay, it tells us what's happened. Okay, and it can tell us that our probability stacks are lining up as to, you know, us to taking a trade. And also we've got imbalance. Okay, so imbalance, we know that the market at some point needs to go back down and readdress this imbalance. We don't know when. Okay, and that's the point. Okay, this imbalance could be active for a week, it could be 2 weeks, it could be 6 months. Okay, in which time price action could do whatever it wants to, and then eventually it will come back to this point. Okay, and readdress this balance, this imbalance. Okay, if we knew when the imbalance would be taken out, then we'd all have private islands. Okay, but we don't. Okay, we just need to look at the price action, look at the probability stacks, and make a decision based on your technical analysis and also the fundamental analysis, which is more tricky to teach because it comes from experience. And this is what I want to be putting together. I want to put a course together to kind of give you an idea of price action and the relationship that gold has with the different things. we're talking about things like, you know, the imbalance that I've talked about, things like consolidation. What is consolidation, and what does it mean in reality? What is actually happening, you know, out there in the cities, in the big buildings? You know, what are people doing? And it's fascinating when you learn about this sort of thing, because you almost start to look at the charts, you look at the candles, and you can see what's happening. You can see the exchange, and you can see the energy. And it might sound a bit hippie-ish, but it's the way it works, the way the markets work. Everything tells a story, and it's all about looking at the charts and saying, oh, look at that, look what happened there. Okay, as a beginner, all you're going to see is a lot of shapes and stuff on a chart, and it's not going to make any sense. Okay, but eventually, when you start looking at this, you start reading, you start understanding, you understand what's happening, what's going on. Okay, and that just comes with just doing back testing, with testing things, with taking loads of different trades on a demo account, and fundamentally being bothered to do it. And I'll tell you right now, most people look at it and they go, no, I can't bother doing that. I'm going to go and watch Netflix. Okay, and when you can be bothered, and you take the time, and you've got that emotional intelligence to learn something, and then you start thinking, okay, I can understand this. Then really you start to you can so change your life with this sort of stuff. You know, potentially, if you learn it, and if you understand it, and if you take it on board, and you make it your purpose to learn, and it's something that a lot more people are doing. But by the same token, a lot of people look at it and go, no, that's too complicated for me, I can't do that. And I'll be honest with you, that's where I was for a long time. Anyway, let's not get into that right now, because let's look at price action. Let's see what's happening. Okay, what's happening is price is starting to approach this green trend line, and let's just go and have a quick look at the news. So my FX book, all right, so look, oh, lots of US news all day US news. Okay, that's going to make the markets sing and dance. All right, and if we look down here, what I always like to do is just go and put my vertical line on. So I'm going to put it on here. We've got news here, we've got news here, and we've also got news here. Oh, come on. Vertical line just here. All right, so we know that price has been manipulated. What time was this? 11:30. 11:30 price was manipulated all the way up for a buy. So what is going to happen? Well, usually with news, with this second one here is higher impact news. This one is lower impact news, but it's news all the same. And what happens is the financial institutions are not permitted to manipulate the markets, but they do anyway, and they do it behind news. So when the markets get manipulated, they go, well, it wasn't us, it was obviously because of the news. So they hide behind news. So if you know that and you understand what happens, then we can use it to our advantage. See all this? All this. Okay, this is institutions putting money into the markets. And usually what happens after a big push, you get a bit of consolidation, and then quite often you can get a push in the opposite direction. So what's happening here, I don't want to take my eye off that, but I'll show you on the 15-minute. So here you have this big level of consolidation. Price goes up and down. Price here went sideways. And what you've got is you've got buyers and sellers all with stop losses in at the different levels. Okay, so when you buy a contract, your stop loss is below, and when you sell, your stop loss is above. Okay, and you've got a big push to the downside. In fact, price went all the way down here, and this is the 15-minute time frame. Sort of within 10 minutes, the price has gone down and then all the way back up within 15 minutes really. And that's a big move. I mean, that's 43 pips. So bearing in mind it takes an average of a sort of $10 million to move 1 pip. You can see what volume is in here. Okay, and this isn't your Auntie May taking the savings from under a mattress and putting it into gold. It's big institutions manipulating the market. So what it's done, all they've done here, okay, buyers, I'm going to go in for the buy. No, actually no, we're going to take out your stop loss. So we've now liquidated all those buyers in the market. Okay, then they push the price back up, and they're taking, in fact they probably pushed the price up before, but they're then liquidating the sellers in there. They're taking out their stop losses. So now the big institutions have now liquidated that particular area of consolidation, and they now have the facilities to go and place orders for themselves and their clients. And then so that's what happened, and price pushed up. Okay, so now we're in a position here where we're back into an area of consolidation. So this here, from, we'll say about there, here to about here. Okay, consolidation, bit of a push out. Okay, bit of a push out. We'll wait and see what happens. Now, because we've got these trend lines on, and you can see that the area is getting smaller and smaller and smaller. We've got this closing, or it's a wedge, closing wedge. It's not the right terminology. I can't remember the terminology. Oh, look at that. Right. I would say get in for the buy now. However, no, I wouldn't say get in for the buy now. I would say this market has been manipulated, but the chances are, because it's in consolidation, they've now taken out the sellers. Okay, the stop losses that were down here, they've all been taken out. All right. So what I tend to do in this situation is I wait and see what's going to happen on the next candle, and that's in just over 3 minutes. 3 minutes and 20 seconds. Okay, that's what's going to happen. And quite honestly, you could see a huge push to the upside, and then you could see a big push to the downside. But you just never know when the markets are being manipulated, and when there's so much US news around. It does make them very unpredictable. But if you understand what's happening with the consolidation, with the banks, with the manipulation, then you have a better idea of what's going on. So we've got a push here on the 15-minute. We've got another big push here. It's now retraced a little bit, but it'll be interesting to see what happens in the next candle. Certainly, I'm in no rush to jump in. Not when there's manipulation about, because price can move so quickly. You see this and you think, oh, it jumped. What did it jump from? It was about here, wasn't it? So it jumped all the way up to here. So it jumped 40 pips. So 38 pips it jumped from there. Previously on this jump here, it went to 80 pips, probably a bit more. The other thing you'll remember is that when you place your order with your broker, the banks can see everyone's order. The banks know everyone's position. So they can say, look, we've got so many million people down here with stop losses. Let's take them out. Let's liquidate them. Let's make another 3 or 4 billion for ourselves. And then we can also see the stop losses for the people, all the buyers, let's take them out as well. And the 5 billion or the however many billions they liquidate from those big moves. Now obviously it costs them to liquidate, but they're getting that liquidated funds back, and then they can manipulate the market in the way that they want to make the real money. Remember that, the markets, the turnover of funds is astronomical, and most people will come out with figures. They'll say, the markets are worth 6.6 trillion a day or whatever. Okay, for most people, for most retail traders like us, it's a lot. Okay, it's a lot of money. Just going to wait and see what happens with this. I think it's how long have we got left on here? Right, next 30 seconds will be interesting. If we'd have been, we wouldn't have got in the trade here because it just wasn't really, price action wasn't doing what we wanted it to, and it shot in that direction north. That is too quick for most retail traders to get in. That's something else that the institutions do. They move the market so quick, people can't get in. Okay. So the next time you get teased into, putting funds into your bank because they've got some lovely horse advert going on, then just think about how they really operate and how they're using their customers and clients' money to make billions and giving you nothing in return, or giving you very little in return. So you might be looking at that thinking, well, why didn't he get in that? Well, if we go back and replay it, you'll see that it went from there all the way up to here, and then came back down. Well, it came back to there eventually. But if we'd have got in this, if we'd say okay, let's go and take 10 pips. That's the nice safe target based on our lot size and account size. We'd have been well in drawdown by now. We wouldn't have been able to keep up with that. So if let's say if we'd have got in there, okay, we'd have gone up to 5 pips. Now down to 8-10 pips in drawdown. With it being gold, with it being an abundance of US news, and because it's on a 5-minute time frame, it's always worth just be patient. Just be patient. Don't rush to get in. Don't be tempted. Don't think you're going to miss out because you're not getting into a trade. That sort of thing. Just wait and be patient, and you'll get in. You'll get in at the right opportunity for you. So we've got a 50 pip move before we can consider a safe entry for a sell. And then if we do get into this position, then potentially we could be looking at, if the ruler will let me work, we could be looking at about 50 pips on that move. Okay, so if we're only looking at taking 10, because that is the sweet spot for this strategy, it's the safe sweet spot, I'll say. It's not the ultimate sweet spot, but we know that the 200 moving average is a nice take profit point once it's gone past the other ones. Obviously here the 800, at any point, okay, the price can bounce or break. Okay, so it could bounce or break there, it could bounce or break here, okay, it could bounce or break there, but once it hits that, once it goes past these points, it's more likely of it hitting that for 50 pips. But remember, our take profit is 10. So maybe you could go in and take partial profits on the way down, so you get to a point where you break even, and you can do all that with Exit Manager and certain softwares. There's one at the moment that potentially we're having developed, which is really exciting, to have our own exit managers purposely built for the Ninjacator. Okay, so you know, again, the community goes from strength to strength to strength, and it allows us to not only have the strategy but have the tools in the toolbox that allows us to do the job a lot quicker and a lot more efficiently. So that's really exciting. So Trey, what's happening with the price? Price is just consolidating. It's neither going up nor down. It's just kind of going rotating sideways. So that sideways rotation. But the market is definitely consolidating, and that means what's going to happen when the news kicks in at 1400. We'll probably see a move. I mean, you can never predict, and you never should predict, because if you start predicting, and if you're lucky and you start getting it right, and let's say you get it right, you know, 4 or 5 times in a row, then you start to think you're invincible. And it happens to a lot of people, let me tell you. So you think, yes, I'm going to predict the market like I did yesterday, because yesterday I was right, and then today you're right, and then the next day you're right. You're setting yourself up for a massive fail. All you can do is set up these probability stacks and say price may go in that direction, but it may also go in the other direction. So if we're looking at price that may go in one direction, why might it go in that direction? Then we can say PSAT, stochastic, price action, imbalance, moving averages. Are they going the right way or the wrong way? And that's all we can do. We cannot predict stuff. So the other thing this push has done, it's also created imbalance. So let me just show you again. You've got imbalance from this wick here, from this doji candle. So the top of that, bottom of that wick, down to the top of this red wick next to it. So that is imbalance. And if I go and put my imbalance template, there we go, that's imbalance. There we go, that looks pretty. But of course, I would imagine what's going to happen, potentially what might happen, is when we get to, let me just see what's going to happen on this one. Okay, yeah, we're still on a, when we get to this news, and the news is coming at 5 minutes, I'm thinking that price might come down quite significantly. It will certainly take out this imbalance, and I'm thinking it's going to end up having a look at this imbalance as well. So where might price go? Well, we've got consolidation, push to the upside. In fact, previous to that, we've got push to the downside, lots of consolidation, push to the downside, take out stop losses, push to the upside, take out stop losses, continue to the upside, consolidation, continue to the upside, consolidation, big push down. So you never know really what's in the minds of the financial institutions, because we've got news here as well. Even though it's slightly lower impact news, they may decide to take people out of the stop losses here, then consolidate it back here and push a big push to the upside. But that's what might happen. This big push down. So the position you want to be in, like I said to you before, when you trade in, you want to be in a position where you're comfortable, where you're in control, where you can see everything. You can see your screens. You've got your MT4 open. You know exactly what stop loss you're going to be putting in. You know you take profits. You understand the strategy. You understand price action, and you can go click in, click out. Okay, or click in, everything's done, and then when your take profit is reached, you're out the trade, everything's safe, and you can get on with your day. And that's the position I'm in right now. MT4 is open. We know what the news is doing. Okay, we know what potentially might happen. we've got our indicators. We're looking at all the information that we need is here. All you need to do to learn to trade is do this every single day or as often as you can, and do as much back testing as you can. Do as many trades as you can on demo. Get to understand price action and understand the relationship between gold and the US dollar and you. Okay. Some people don't trade gold because they don't like it because it moves too quickly. By the same token, some people don't like Swiss francs because they think it just does its own thing. It does its own thing, and you know, when you look at the economic and political structure of Swiss francs, then you can start to understand why. So if you're looking at trading Swiss francs, do the back testing and understand the subtleties and the nuances and the way the price action works with Swiss francs. And you know, if you're saying, okay, I don't want to trade Swiss francs because I don't like it, I don't want to trade gold because it's too volatile, don't like it, all it really means is you don't really understand it. Okay, and to understand it, to understand the relationship, to understand how you can, you know, win the game, it's just a case of doing more testing and being more experienced in what you're doing. And then you do that back testing, you become more confident. The danger is not becoming too overconfident when you start winning trades, but just remembering that the people who are in control with trading is not you. And you know, unless you're a financial institution with trillions and trillions to spare, you're never going to be in control. You're just going to be that person that, you know, one analogy we tend to use is dipping your hand in the cookie jar or the biscuit jar. Okay, dip it in, take one or two cookies, that's it, you're done. Okay, don't be like a lot of people and they try and take all the cookies and take them all and then they're poorly. Just take one or two, put the jar back on, that's it. Come back tomorrow. So we've hit the news and price is showing it's going to the upside slightly, but that could be a bit of a false breakout, a fake out as it's come to be known as. So it's showing its sign, you know, it's showing its, people like me will be saying the same things. Okay, let's wait for the news, we've got consolidation previous, you know, price probably going to the downside, and they'll go, no, we're going to show you what's going to happen, it's going to go up. You're thinking it's going to go down because that's, you know, that's the way we want you to believe price action is working, and we're going to push to the upside, and then while you're not looking, we'll shoot down to the downside before you can even react. Okay, but we're already here, so we've got finger on the button, ready, waiting. Okay, remember, if it's going to go down for a sell, we've got to go down, we've got to hit this PSAR first, so we make this a bit bigger so you can see it. This PSAR has got to flip, where is the PSAR? I think it's here, yeah, it's there. PSAR's here, price has got to come down, it's got to hit this PSAR, which is there, that'll go to the top, price then going to go below the trend line, and then when it gets to below this trend line, then, you know, between the trend line and the 800 moving average, we've got 30 pips. So does 10 go into 30? Yes, it does. So potentially we could get a trade in here. Okay, but at the moment, the price isn't showing its hand. Price is still going to the upside. There's the higher high of that upside. Okay, so it may well touch that area there before going to the downside. It may not go down to the downside. So you can see why this was imbalanced, because there were no sellers. It was just all pure buyers. Okay, so here you've got buyers then you've got some sellers, then you've got some buyers, then you've got some sellers. Okay, and there was no imbalance other than this here. So if you look at the stochastic, it's quite interesting, because now pretty much everything apart from the 4 hour, and even now the 4 hour from here is starting to tail up, this is lining up to say that there's potentially going to be a sell move when all the different time zones come together. Okay, and they're starting to go into the extreme. The extreme here is the 80 and the 20. Price is still telling us that it's still in consolidation, despite the fact that we've got this high impact news, and at any point that could shoot down 50 pips in, just like that. 50 pips, you could take out this piece out, it could flip, and then it could be hovering down here, and then we're sort of looking at waiting to, if it got down to here, then depending on the way price action was, and depending on the situation at the time, and you can see here, look, this PSAR was down here, it's now moving up. So again, another probability stack is that when the PSAR, the gap between the PSAR and the price gets less and less and less, again that's another indication that volume is running out. Yeah, the buyer momentum is starting to run out. So we've got medium, yeah, we've still got medium news in an hour. An hour and 23 medium news, more medium news. I'm not quite sure, that's probably the same meeting, isn't it? Must gotta be. I mean, what we could do, if you sat there and you're thinking, well, you know, I've only got a certain amount of time to trade. We've been on for like an hour, and we've been on an hour actually. Lunch break's finished, what can I do? Well, the simple thing to do is go up to here where it says parallel channel, click there, and what we can do is we can go to this area here, put this area on, probably down to about here. Okay, so this is, I mean, you could even make it a bit higher, but this clearly is an area of consolidation. And what we can do, we can put an alert on this parallel channel just by clicking this timer here, add alert, and then we can, it's on there, so we can put it on exit in the channel. At the moment the price is inside the channel. When it comes outside the channel, then we can get an alert. If we do it once, hopefully if you're watching and you're staying on, you'll get some idea of what that is. But just create, that'll put like a little indicator next to it. As you can see there, it's just popped up, little indicator next to it. We know we've got an alert on there, and when price goes outside this channel, we'll get an alert. And again, if we're sat here, we're getting a bit bored, you can get a notification on your phone, notification on your desktop. But remember, it is gold, so sometimes it will shoot down, as we've seen here. Shot up, in fact, shot up from this trend line, didn't it? From here to here in a blink of an eye. So it could do that. But again, it's something, you know, if you've got to go back to work, then it's just one thing that you can do. And then if you can get familiar with placing trades on your phone, a lot of people prefer to trade on the phone, then you can do that. You can get back to your work, have a look at your phone when the alert goes off, and consider getting in a trade or not. Right, well, I'm going to go and get a cup of tea or a cup of coffee, probably a cup of coffee I think, and I'm going to stop the recording. It's 14:09 right now, and it'll just be quite interesting to see what's going to happen with price, whether it's going to continue to consolidate until it gets to this news. Again, we've got 50 minutes left of the session. We'll come back in a few minutes. Okay, McLaughlin here, John McLaughlin here. I didn't even get a chance to get out the office or even off this chair when price moved.
So price came down, the alarm went off for this parallel channel. It's taken out the PSAR. The PSAR is now flipped. We've got a ninja down alert, and what we're going to find is that this trend line is now going to offer some sort of resistance. So price came down, touched it, it bounced off it. So again, price does two things: bounce or break. Will it bounce off it? Might it go through this time? But we're still taking out this imbalance, but we're not really quite in a position to take the trade, to enter the trade. So we're going to wait. And what I want to do as well is, because we've got this horizontal buy line, I want to wait really until it gets past that buy line into this clean air. If it does that, which I'm pretty confident it will, then we've still got a nice 23 pip move down to that 50 moving average. The red one is the 50 moving average, the grey one is the 800, and it'll give us enough movement to take our profits. But at the moment it's still bouncing off the red trend line. And if you look at the stochastic, you can see that the stochastic is, all the time frames came to the top into the extreme. They're starting to just open up a bit more now and tail down. That's a fairly good impression of the stochastic, but it's tailing down, and it's telling us on this time frame that the sellers are in control, which obviously we know anyway, because we can see that clearly. And the 4 hour time frame is still down on its own, okay, sat there. So if you're doing a different strategy on gold and you're in a longer term trade, then that will be appropriate to you. But for us doing this Crossfire 5 minute strategy, it's quick, it's dynamic, we've got to be on the ball, and we're just waiting right now to see what this candle is going to do. We're 1 minute and 20 left, and what I want to do, I want to see the price come down. I want to see it break past this trend line. I want to see it break past the green trend line. Then I want to see a little bit of a gap. I want to see some air between the body and the candle. I don't want to see a wick really wicking through. I want to see a nice clean body, nice bit of a gap, and then we'll consider getting in the trade for the push to the downside. But at the moment, long way to go, because you see it's retraced all the way back. It's taken that, taken 75, maybe 80% of that imbalance away. And as you can see, one of the things it does though is that because the price came down and touched our trend line, it tells us that the trend line's in the right place. So it gives us confidence to know that trend lines are in the right place. It gives you confidence in your strategy. Right, so it's 14:32. We just got back onto the charts, and the price has just shown its hand, just gone past. It shot down through the red trend line, it shot through the green trend line, and we've got 2 minutes and 40. I'm pretty sure that what's going to happen is eventually the price will come down to the moving average, to the red moving average, the 50 and the 800, and then maybe even down to the blue one, the blue 200 moving average. So we'll see how things go. So 2 minutes left, 2 minutes and 15 left on this particular candle on this time frame, and we'll see what happens when it moves across. So 38 seconds left on this time frame, and again, what I would like to see is for the price to come down, to have some clear air between the green trend line, and then we've got a bit more air. At the moment it's a bit wicky, so I'd rather not have a wick going through the lines. So it just gives us a bit more decisive price action. You can see what's happening right now. You've got this little bun fight between buyers and sellers. Buyers, I want to push down. Sellers, no, I want to push up. So you get this like indecision. One thing to note is that from previous price action up here,
with all this consolidation, the price seems to be a bit more lively than it was. And I say it could be getting itself ready for this news here, but I think that there's more potential of it going down for us to achieve our targets. So it's going down now to achieve our targets before this news. And the other thing as well, this news isn't till 3:30. So do you really want to be sat on the charts for that length of time from 1 o'clock till 3:30 to see what may happen? Not really for me. I'd rather just like to get in the trade, get out of trade, and then get on with this new course that I'm going to be doing for people. So it's bouncing off the green trend line. So the green trend line clearly is quite an area of resistance at the moment. So it just pushes through it, then it just retraces back. So what we want is for the price to come down below the green trend line, like it's doing now, then form a new candle, so we'll get a nice little gap, and then we'll get in the trade. And the target for that, if price allows us to do that, then the target would be the red moving average. Okay, the 50 moving average. So we've got 2 minutes 28 seconds. Excuse me. 2 minutes 20 seconds left on this time frame. Tempting as it may be to get in the trade, and this is down to your own experiences, would you want to get in a trade right now? And potentially you could get in a trade right now because price is heading south, and it looks like we've got 55 seconds left on this time frame, and the chances are it may retrace, and we may get in up here, but we may also be too late to get in down here, because by the time this time frame ends, price may well already be at the 50 moving average. So what we want to do is make sure that this doesn't retrace all the way back to here. If it keeps retracing, if it just goes to there or stays where it is, then we're quite happy. And what I'm going to do is I'm going to get in. Okay, we're in the trade. So from here to here, again 5 pips, but given the way price is going, it may well go past that eventually, and then down to here with 17 pips, and look, it's shot past it. It's just entertaining it a little bit. Then from that price, from this area here, you could, in fact, probably talking a bit too preemptively, but it seems to be quite happy to go past the 50, using the 800 as a take profit level. What you could do is take some of your profits out, or adjust your stop loss to break even, to then continue to the downside to the 200 moving average. Yeah, and it's still going. Sensible thing to do right now would be to obviously cash out some pips, because the strategies take 10 pips. We know the sweet spot is taking 10 pips. Okay, so what I would say is if you're watching this right now, cash out and take your profits. For those that are a little bit more experienced and you're looking at taking your profits down to this 200 moving average, again, use your own discretion, use your own experience,
to do that. But this area of imbalance needs to be taken out. Okay. Still just, it wants to go down. There's a bit of resistance from this area of imbalance. There we go, we're starting to see a bit of progress. So I entered the trade just around here. I got in maybe a little bit early, but I was fairly confident that it would go down at least to this level, and then if it went even further, then even better. And as you can see, it's coming even further down. It's gonna hit that moving average. In a situation like this, would you leave it any longer? I would say not, because at the moment I've taken the best part of 80 pips right now, just using the moving averages as take profit levels. Now that was good for me. I'm happy with that. Okay, and now the chances are that the price could come down and eliminate all this imbalance, in which case you would make, well, from here down to here is 90 pips. Okay, so my first trade I took here, and then I took a second trade when it actually went into the air. So the first trade really is the sort of thing I took on experience. The second trade I took because that's what I teach, is to be safer for people who are learning it, because what you don't want is to take a trade and then see it go up and down quite with some volatility, because that's what sometimes happens. But then what happened there, 2 trades going down and the best part of 80 odd pips. Remember, the sweet spot for this is 10 pips. When you first getting started, because the 10 pips then builds your confidence as to what may or may not happen. And like I said, look, take profit level is a 200 moving average, and now it's hit that moving average. The price is now retracing; it's going back to the upside. Now, if I'd have been a gambler, or maybe a little bit greedy, or a bit too clever, trying to be too clever, and thinking, well, okay, let's see if it's going to take out all this imbalance, then potentially, if this retraces all the way back up to here, then you're going to lose all your profits. Which is why we say 10 pips. How many 10 pip moves are in here? Okay, plenty. Okay, there's not many big, massive pushes. And as you can see on the 15 minute, big push to the upside, big push to the upside, big push to the downside. There's a lot of 10 pip moves, safe 10 pip moves that can be taken in that. And like you can see, look, see what's happening with the price. Moving average is acting as a resistance zone. If price pushes through from that, then the next little take profit will be down here. If it pushes through that, once again, we're in a position where we might consider, would we consider getting into a trade? It's 28 pips there. So would we consider getting in a trade where we could take 28 pips, or we just go, okay, we're happy with the profits that we've taken for today? For me, based on that, I'm just happy with profits I've taken today. You know, we've been talking about maybe price breaking through. There's a minute left on this time frame. Possibly, breaking through the moving average to go below the moving average to then go and take out the imbalance for a further 28 pips. We're not in the trade, but it's always good to see what price is doing, and then we get a better we get a better feel, we get a better flavour of what's happening in the markets the next time we come on the charts, and the next time we go for a trade. So there's 10 seconds left on this time frame. If price, yeah, it looks like price is going to go and take out that imbalance, because the next candle is going to be below the moving average. There you go, look. A little race to the end, a little race to the finish to take out that imbalance. See how these imbalance zones work? I just love imbalance. You don't know when it's going to happen, but when you see things lining up, when you see the confluence, so that those probability stacks, you might also have heard the term confluence. It just means the same thing. Everything lining up, all your ducks in a row, and it's just that doing that technical analysis of finding out, what is happening, what does that mean, what does consolidation mean, get everything lined up, and then, this might not take out the imbalance, but where has it got to go now? Where could price go now? It's gone past the moving averages. The stochastic is starting to go into the extreme on this time zone. If we go on the 15-minute, so it gives us a slightly bigger indication of where price can go. Well, obviously we've got this imbalance here that needs to be taken out. Is now a good time for it to be taken out? Potentially yes, because you've got news coming up at 15:30, and then price could do anything from there. Just a minute. So we can look at the next lower lows or the next support and resistance zone. So looking at the 15-minute time frame, if I put a trend line on, no, I'll put a horizontal ray on. This area here is a support and resistance level. In fact, we've got a better support and resistance level here, which may give us an idea of what's happening. Where are we? So there, just where price is now, is a support and resistance level. So it's just here. So we've got a touch here, we've got a touch here, and then we've got a touch here as well. So price at this level, it may well go into an area of consolidation before it meets the news here, before a further push and take out this imbalance. Let me just see what I've got. Some imbalance here. I just want to see what that is. I think that's old. No, that's consolidation. That's previous consolidation. We'll get rid of that. And again, try and take as much off your chart as possible. Try and keep your charts nice and clean. Okay, you see what's happened here? Look, it's pushed through this support and resistance zone. It's pushed through that support and resistance line. It's offering resistance. It pushed through it. We've got 1:24 on this time frame, and it may well act as a resistance zone. We may push through it. I think possibly. I'll put my neck on the line, but I think before we hit the news, I think it's going to take out the imbalance. It's pushed past it. How much have we got left? Oh crikey, it's almost there, look. 36 seconds left. Guarantee it's going to touch it. Oh dear, look, there it goes. the bottom has just dropped out of it. It's just going down and down, down. Crazy times. Let's just see what's happened here. Another support and resistance level here, just here, and it's almost touched it before retracing, but we could have stayed in to take out the imbalance. Had we not had the imbalance there, what would we be looking at now? We'd be looking at, okay, would we have stayed in the trade? would we have stayed in the trade if we had the moving averages on? Okay, if we took all this off, then really, what are we looking at? Okay, we're looking at a chart doing something, okay, but we wouldn't have those zones to go for, those potential target areas. So, what have we used? Right, I'm gonna log off in a minute because I could be on here all day. So what have we used to do this trade? Okay, we've used the Ninjacator alerts. We've used moving averages. We've got the PSAR. Okay, we've got the stochastic, and we've got imbalance. Probably 5 things. And what I'm going to do, I'm going to go through those 5 things on this course that I'm going to put together, and I'm going to make it available to everybody who's interested in this strategy. Because there's one thing doing a strategy, there's another thing really understanding those nuances. Okay, so if I talk more about imbalance and exactly what it is and how it makes the markets react, then you'll understand it on a deeper level. You know, moving averages and everything else that I talk about. It's going to make it a lot easier for you to understand this and what price action is and why price moves like it does. All right, that was a good day. That was a good day trading. It took a while to go. This move here, remember that real sudden push? For me, it was too quick, and I didn't really like it because it went too quick. And when you see price moving really quick like that, it just means the banks are manipulating the markets and they're trying to catch us retail traders out. And we do get caught out too often because of their manipulation. So we looked at this consolidation, push to the downside. I then said, we have to wait until price gets below the red trend line and also below the green trend line. And we ideally want some clear air, and that opportunity presented itself just here. Okay. Now I did get into the trade here, but that was down to my own analysis, and I wouldn't really teach you that because it just comes from experience when a trade either feels right or it feels wrong to get in. And that for me, it felt right to get in. I knew I'd probably end up in some drawdown. I did end up in some drawdown, but then ended up very nicely into profits. So get some air between this trend line here and this candle. That's where we got in. That's where we officially got in. To here, down to the moving average, okay, for 46 pips. And the move actually went down to 100 pips in profit. Okay. Right, so that's me done for today. We're back to I should be back tomorrow. Okay, I might be in a different environment, but I'll be back tomorrow to a Crossfire strategy on gold. Hope you enjoyed that. If you've got any comments or questions, just put them in the comments below. And remember, go through, if you're watching this on YouTube, go through the description. There are a lot of links, a lot of useful information that you can use. And as soon as I get this course put together, today is the 29th of June, I'll probably start doing it next week, and generally it'll be finished by the end of the week and on a website ready to look at and ready to learn from. So that's my goal for next week. All right, hope you enjoyed it, and we'll talk tomorrow. All right, take care, bye for now.